Hello everyone, this is Praveen Kumar from CIC, roll number 701. Today my seminar topic is fiscal policy and economic development. First of all, we have to know about the meaning of fiscal policy. The word fisc means state treasury, and the fiscal policy refers to the policy concern the use of state treasury. That means the policy which is developed to use the state treasury, the money which is used for the development. Like that, the fiscal policy can foster the growth and human development through a different number of different channels. Next, the fiscal policy is that a part of the government policy which is concerned with raising the revenue through taxation and other means and deciding on the level and pattern of expenditure. The fiscal policy operates through budget. Budget is an estimate of government expenditure and the revenue of ensuing per financial year. That means the money which is allotted for the development of the state by the government. Next, the objectives of the fiscal policy: the development by the effective mobilization of resources, efficient allocation of financial resources, reduction in inequalities of income and wealth, price stability and control the inflation, employment generation, capital formation, development of infrastructure. The above all objectives are happened by this fiscal policy. The government will develop the more industries and make more employment. By making these all making industries and employment, they will stabilize the income and wealth and control of inflation. The objects will be fulfilled by this fiscal policy. Now, instruments of fiscal policy: there are four instruments of fiscal policy. First one is government expenditure, next taxation and public debt, and budgetary surplus and deficit. First of all, we will see the government expenditure. Government expenditure, it includes government spending on the purchase of goods and services, payment of wages and salaries of government servants, public investments and transfer payments. And next, taxation, meaning no quid pro quo transfer of private income to the public coffers by means of taxes. As taxes can be classified into two types, one is direct tax and another income tax. First one, direct tax. Direct taxes are corporate tax or tax, personal tax, income tax, and fringe benefit taxes, banking, cash transaction taxes, and the taxes which you have paid in every product on every product. Next, income taxes are central sales tax and custom service taxes and excise duties. The next tool is public debt. In public debt, it includes internal borrowings, borrowing from the public by means of treasury, bills, and government bonds. Borrowing from the central bank mentioned as the deficit financing, and the external borrowings, foreign investments, and marketing borrowings. The next one is budgetary surplus and deficit. A budget is a detailed plan of operations, some specific future period. An accumulated deficit over several years is referred to as a government debt. A deficit is a flow and a debt is a stock. Debt is essential and accumulated flow of deficits. Now, the limitations of fiscal policy. The tax structure of developing countries is narrow and rigid. There is a need for a well knit and integrated tax policy. On account of socializing reasons, there is a tendency on the part of the people to invest their savings in immovable property, often jewelry or anything land or anything buildings like that. A sizable portion of developing countries is non-mentioned, adversely affecting the success of the fiscal policy. The other thing was lack of activity data recording income and expenditure or savings. investment, employment, etc. That complicates the task of the state of the formulate and implement of the effective fiscal policy. Administrative machinery responsible for the execution of fiscal policy is corrupt, incapable. So, by this, the fiscal policy will develop the economy, and at the same time, it has some limitations which will lag the development. So, by doing some changes in the fiscal policy, we can develop the economy. Okay. By this, I am ending the my seminar. Thank you.